Hello everyone, welcome back to our channel. Today we have an exciting topic to dive into.
All right, let's jump right in. Today, we're going to look at a totally different way to think about trading. It's a strategy that pretty much throws all the usual indicators out the window. The core idea? That the market doesn't really move because of price, it moves because of time. So let's kick things off with a question that kind of flips everything you know about trading on its head. I mean, think about it. We're all obsessed with price, right? We're looking for breakouts, watching trends, drawing support and resistance lines. But what if that's not the whole story? What if the real secret to why markets turn isn't about price at all? What if it's all about the calendar? So here's the game plan for today. We'll start by talking about this whole idea of trading beyond price. Then we'll get into the specifics of these 4 special days that are the secret sauce of this system. I'll show you exactly how to mark them on a chart, and then we'll look at a pretty mind-blowing real-world example. And to wrap it all up, we'll finish with a big question that this whole thing leaves us thinking about. Okay, first up, trading beyond price. This is all about shifting our focus from what the price is doing to when something big is likely to happen. So look at this. The way most people trade, it's all reactive, right? You wait for a price to break a line and then you jump in. But this time-based approach, it's the complete opposite. It's predictive. It uses these natural, recurring cycles to tell you in advance where the important turning points or pivots are likely to be. Then all you have to do is wait for the market to come to you. So you're probably wondering, what are these special times? Where do they come from? Well, according to the source material we're looking at, they're not just random dates pulled out of a hat. No, they're directly tied to 4 huge astronomical events that happen every single year like clockwork. And here they are. The entire system is built around just these 4 dates, the spring and fall equinoxes and the summer and winter solstices. I mean, these are literally the turning points of the seasons. They happen about every 3 months, and they mark a fundamental shift in the rhythm of the year. The reason these specific days are so important is because they represent these moments of either perfect balance, like the equinoxes when day and night are equal, or total extremes, like the solstices with the longest and shortest days. The whole theory here is that these powerful natural shifts on Earth actually create ripples or turning points in the financial markets, too. Okay, so that's the theory, and it's pretty fascinating, right? But how do we actually use this? Let's get practical and see how we can turn these dates into actual levels we can draw on a chart. All right, this part is absolutely key. The high and the low of one of these special days aren't just numbers to forget. When you draw them as horizontal lines going into the future, they become what the system calls pivot points. Now, these are not your typical daily pivots you might see everywhere else. You're not supposed to trade breakouts from these lines. Instead, you should think of them as magnets, levels where the price is expected to either slam on the brakes and reverse, or just kind of hang out and consolidate for a while. And the method itself? It's honestly surprisingly simple. First, you find one of those 4 special days on your calendar. Second, you just mark the highest price and the lowest price from that day. Third, you draw those 2 lines forward in time. And then the 4th and maybe hardest part, you just wait. You wait for the market to come to your level. But, what happens if one of these dates falls on a Saturday or a holiday when the market's closed? Well, there's a really simple rule for that. You just look at the trading day right before the special day and the trading day right after. You take the highest high and the lowest low from those 2 days combined, and boom, those are your pivot lines. Okay, so it's a neat theory, but does this stuff actually work in the real world when things get crazy? Let's put it to the test. We're going to look at a really dramatic recent example from the source material, the massive market crash during the 2024 Indian election results. So on this day, June 4th, 2024, the Indian market just fell off a cliff. It was a huge, volatile drop that shocked pretty much everyone and wiped out a ton of money in just a few hours. This was a classic black swan event, something nobody saw coming. Or maybe someone did. And this is where it gets absolutely wild. The claim from the source is that this chaotic, panic-driven sell-off didn't just stop anywhere. It stopped, almost to the exact point, at a pivot level that had been sitting on the chart for nearly 6 months, drawn from one of those 4 special days. And that pivot level? It came from the low of the Winter Solstice all the way back on December 21st, 2023. Just a line drawn on a chart, extended forward and just waiting there. And get this, on the day of the crash, June 4th, 2024, the market hit a low of 21,285. That's just a 3-point difference from a level that was set 6 months earlier. So you have to ask yourself, is that just a crazy coincidence, or is it proof of some hidden rhythm in the market?
And this isn't just a one-off thing for one market either. According to the source, this principle works pretty much everywhere, on stocks, forex, crypto, commodities, you name it. The only real condition is that there has to be enough trading volume for these natural laws to show up. Now, you could use this as your only strategy, or you could just use it as a powerful confirmation tool on top of what you already do.
But hey, let's be real for a second. No trading system is a magic bullet, and this one is no different. Sometimes the price is just going to blow right through these levels. And the source is actually very upfront about this, which brings us to our final and maybe most important point. The presenter straight up says that this is all about probabilities, not crystal balls. They figure it's about 75% accurate. That means 1 out of every 4 times, the level is probably going to fail. And just knowing that and accepting it is so important for managing your risk and keeping your expectations in check.
And that leaves us with this one last, really interesting mystery. This method gives us the what. It tells us the price level where a big turn might happen, but it doesn't really give us the when. How do you know which time the market hits one of these levels it's going to be the one that works? The source kind of hints that this is the next level of the puzzle, a deeper dive into time itself. It really makes you think, if the market truly does run on time, then knowing the price is only half the battle, isn't it?
இந்த வீடியோ உங்களுக்கு பிடிச்சிருந்ததுன்னா லைக் பண்ணுங்க, ஷேர் பண்ணுங்க, சப்ஸ்கிரைப் பண்ணுங்க. Thank you for watching.